Check, please.
Hey, welcome back to Everything Money. In this video, we're going to talk about Warren Buffett and his Buffett Indicator, what this graph means, what it should mean to you as a viewer in terms of where we're headed. This indicator can give us a glimpse as to what's to come, especially in terms of stock prices and the economy, inflation. We'll take a look at all of this and more right now. Paul, give us your thoughts on this.
Guys, Warren Buffett was once quoted as saying the stock market to GDP ratio is probably the single most reliable metric at any given time on where the stock market falls in terms of valuation. This has now become called the Buffett Indicator. And what it basically is it takes the entire stock market value. Now, this is where it gets tricky because their numbers are all over the place in terms of what's the entire stock market. A lot of people call the World Star 5,000, and I think this metric here that I'm going to show you does that. But the bottom line is, pick the S&P 500, pick the Russell 3000, whatever it is, as long as you do a ratio based on the GDP, and you look over time, you will see the metric and where it falls. Now, the idea here is, as the U.S. economy grows, and GDP is basically the national income of the economy, all the companies in the U.S.'s income should grow as well. So if the values of the stock market are skyrocketing while the U.S. economy isn't growing as fast, the stocks are becoming more overvalued and vice versa. So here's a chart going back to 1950 of this. This is the trend line, and this is where we stand at 197% ratio of market to GDP. This says 52% higher than long-term trend line. I've seen other websites like Guru Focus that say we're 70+% over. Now remember, guys, how often are we ever at this trend line? I always hear people say like, oh yeah, we could get back down to here. No, we don't do that. We either are way above or way below. Not way, but the point is we crossed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 times in the last 70 years. That's it. The whole point is we're either going to be above or below. When we're below, this is when fear is the highest. Look at how low we got here, guys. Look at how low we got. 30%, 32% down in 1982. The tech boom was 155%. We got as high here as 210, 215%. This is insane. To keep in mind, they don't have this going back to 1928, the Great Depression, but I think that one only got to like 130.
Why is this insane?
This is overvalued. This just shows how overvalued stocks are. This is crazy, guys. And guess what? The pendulum swings from extreme to extreme. This is the most extreme time in history. My guess is at some point, we're going to be at one of the most extreme lows of history.
What will that mean for a normal viewer?
So a lot of people might be watching and saying, hang on a second, but what if values just increase? They will. Fundamentals will get better. But it's much easier for stocks to fall than for fundamentals to get better. The good news for you as a viewer is you have a long-term outlook on investing, 20, 30, 40 years for retirement, which is our average user, you're going to be okay. Because these things usually pass through every 10 or 15 years. If you only have 10 or 15 years to retirement, I'm not trying to scare you. I'm just trying to tell you, be cautious. Buy higher quality companies that have good cash flow and good balance sheets. They will be hurt the least in this. The good news is, just like here, the biggest falls will happen in the most overpriced companies. As you've seen, as I said about ARK Investments, they went from $160 a share down to $58 a share. All these companies are down 60, 70, 80%, and they're going to go further. And it will drag the rest of the market down. Trust me, that'll happen. But that's okay. We need to rid the market of crap in order to get the good stuff to come to the top. That's just the way it works. And it might seem scary, but you'll survive it better than you think. The good news for you is if you're still investing money, as it falls, you'll be buying better companies at better prices. The process that we're teaching everyone and the process that we're trying to learn every single day is buy good quality companies day in and day out. Dollar cost average, they go down. Facebook and Baba, Intel, Walgreens, these are the companies that I personally own. I'm not telling you to own them, but I personally own because I like their potential and their balance sheets and their future. And the price relative to the value. And that's why I own them. I don't know when they're going to bottom. I don't know when they're going to top. But I do know that if I had to buy them today, I would buy them today at their values.
So if this methodology speaks to you at looking at the numbers, you can have the software in the palm of your hand on your phone right now behind Paul. Paul, tell them how they get it.
So guys, when we first started this channel 2 years ago, one of the most common questions we got was, how do I analyze companies the way you do without waiting for you to make a video? Because I was using Y charts, which is a great service, but very expensive. So we invested hundreds of thousands of dollars and constantly invest multiple 5 figures every single month in our software. You get everything you've seen so far. You get the 8 pillars, retirement calculator, stock analyzer tool, 8-pillar portfolio, exclusive video content. Every single day we release videos only for the users of our software and our app, because this is all available on our mobile app as well. You get a watch list, which is coming out very shortly. You get real estate calculator, all these things that are coming out soon you get as well. But most importantly, guys, you get this, the EM community, because the most common thing we heard and the most common thing we all experienced was we felt alone being value investors. We were ridiculed. We were told you don't get it. But in this community of over 6,000 people, we can now have conversations and have like-minded conversations. Today, Alibaba is down 10%, and people are talking about it because it's a big holding of ours. And it's a value play that we truly believe in. So this community allows you to go in there, have conversations. There are 2 ways to sign up for Everything Money's software, everythingmoney.com or Patreon for our international users. The benefit to everythingmoney.com directly is you don't pay sales tax yet because we're not big enough. Guys, if this could increase your returns by 1 or 2% a year or decrease your losses by avoiding the big losses by 1 or 2% a year, this will reap hundreds of thousands, if not millions of dollars in your retirement. No brainer, $1 per day, less than a cup of coffee is what this costs. And whatever price level you sign up for, as we increase the price in future months, you're stuck at that level. You stay at the same level. No brainer, go sign up.
With all that said, Paul, this sounds really scary. I mean, I'm trying to save for myself, for my kids. I got a lot of money. I got some money was saved for retirement. I've seen it go down drastically already. I'm worried. What does all this mean to the viewer?
Go look at the history of the stock market and go look at all the bad things that have happened in this country in the last 120, 150 years. And guess what ends up happening? Stocks eventually rebound and they get to higher levels. Your job is to dollar cost average. Their job will be to sit there and be emotionally in tune to the way things are. Just the reality of it. This is why we created all this software in this EM community chat. We have 6,000 people in here talking about this stuff and actually sitting there and discussing like, hey, what do we think about this? I literally see people saying, remember what we're taught. We're taught to reevaluate and decide if it's still a good deal as the stock falls. And trust me, guys, it is hard. It's not an easy task. I get that completely. I still battle with it. But the point is, that's why we have this community built. That's why we sit there and say, okay, wait a second. If the stock market were to turn off today, and I were to own Facebook and Alibaba at today's prices for the next 10 years and then opened and all of a sudden revalued, would I be happy? Yes, I would be happy. And that's when I know I have to buy the company. That's a very hard thing to do. And if it makes you want to check every day, stop checking every day. Don't check every day. Very simple. If you're a recovering alcoholic and drug addict, what's the first thing they teach you? Stay away from the people that accentuated that behavior. Get away from that. Stop being around drugs. Stop being around alcohol. You might sit there and think I'm joking about that. That's an absolute truth. You're addicted to looking at your brokerage account in the stock market. Stop doing it.
This took me years.
You're still doing it.
No, not at all. I swear, Paul, I swear. I have no clue.
I heard all the time for previous of 1 year, Warren Buffett's past his prime. I don't hear anything about the fact that Warren Buffett is crushing everybody right now.
Crushing
everyone right now. Nobody talks about that. All of a sudden, that information doesn't matter. Why? It's only been a year. So wait a second. When ARK is up for 1 year, it's the new thing. When Buffett's crushing ARK for 1 year, it's just a fluke. That's weird.
Dude been crushing it since the 60s.
Since the 50s. And that guy learns every single day. Every single day, and he's 91 years old, and he still learns every single day.
So it's this patience, I think, to know that we'll be better. And this is, like you said, Paul, a very learned thing. It takes time. And,
it will never, ever end, but that's the joy of it. The joy of it is it will never end. You will never stop learning. I haven't stopped learning. I'll never stop learning. If you think this is an end result that's going to happen, I don't know what to tell you.
I spoke to someone and actually saw YouTube about that same thing. So when it's skyrocketing, it's how amazing the company is. And then when it falls, well, no one knew the market was going to crash. How would we know?
The market hasn't crashed. It's down 15%. If you think that's a crash,
it's not even in correction territory yet.
Yeah, that's not even a correction. That's not even a bear. No, it's a correction. 10% a correction. Bear market's 20.
Bear market. I'm sorry. It's a 10% a correction. Yeah.
Come on. What are we talking about here, guys? This is about it for the long haul. Stick with the long haul. Buffett's not an idiot. His truisms will happen forever. And has he modified along the way? Absolutely. He used to want to buy companies that were what called cigarette butts, where they had the last one puffing them. Now he tries to buy good companies with high return on invested capital that have moats that are going to be around for a long time. Okay, so have I. I've changed my method too. I don't buy small companies.
Munger pushed him to that.
Yeah, Munger pushed him to that.
If you're drawn to all this, again, join the community. You can get the data. Click on the top right corner here. You can see a card about the 8 pillars and how we analyze the foundational aspects of a company and moving forward. Patience is learned, and we're all doing this together. So let's have discipline, patient investments moving forward, and we can guide you and help you in our community. Fondle thumbs up, subscribe. We'll see you next video.